So this is YMP TV, and we're now on episode 9. And today we have Frank Holmes, CEO of US Global Investors and Executive Chairman of HIVE Blockchain. Hi, Frank. Nice to see you again.
It's great to be with you, and also the chairman of GoldSpot Discoveries.
Absolutely. Based in Montreal, so that's good. I should mention it.
Yes, and lots of incredible PhDs, young people with the geoscience degrees applying AI to unlock exploration.
You'll have to tell us more about it, but I'm going to start with the big question, which is, what do you think with the excess money that is being created in the market, and we've seen it like with coronavirus relief package that the governments are putting in the market, will this create a greater demand for gold, whether it's physical or gold stock, and will this increase the price of gold?
Well, clearly it's a game changer. It was so fast this time for the government to do bailouts or print money, and there wasn't all this negative, anti-protests of Wall Street, etc. we had before. And it's a global phenomena that everyone is getting behind it. And I've tried to explain this in simple terms. Everyone knows OPEC is a cartel. And so what's happened since 2008 and 9, that crisis period, is that the G20 finance ministers and who's ever head of their central banks have formed a cartel. And they have their own separate meetings. Not only their high profile is when you have the prime ministers and the presidents of those G20 meeting, but there's all these other meetings. And it's synchronized, global synchronization of printing money at any cost just to bail out this. And so we're going to see negative real interest rates for a while. We're going to see the U.S. probably take it up to $10 trillion, $5 trillion on the balance sheet for the Fed, and another $5 trillion of money coming from the White House and the Beltway parties, as they call it. So I think it's really important for people to recognize paper money is to cover all these problems, but you can't do that with gold. Gold takes real money, real risks. It's a long process to explore and discover, and then you have all the environmental issues to develop a deposit, and then you have all the costs of going underground to find an ounce of gold and then refine it. It's a lot of work, so the value of gold is only going to go up.
And where do you expect the prices to go in the next couple of months or the year?
Well, if you look at palladium as an example, palladium was going through a period of close to 5 years of deficit. That is, the demand was growing at 3% more than the supply was coming from predominantly Russia. And then all of a sudden last year, no one would have bet that palladium would go from $900 to $2,700. We're having now going the same thing with gold. The peak supply of gold from mines is this last year, and we're going to start seeing it decline each year. But now there's money printing, and this money is going to start showing up in gold. And that demand we've seen for physical gold, that the premium has been $70 an ounce over the futures price. So we can see this cycle all of a sudden grow. And what's also important is China and India. India, affectionately known, is 40% of the world's population. And if we go back 30 years ago, there were consumption of gold was about 10% of the world's gold. It's now 50%. And why is that? It's a very simple graph. It's called GDP per capita. And as it's been rising on a 45-degree angle for India, then you've seen them just buy more gold. And they buy gold for love. They protect their family. They love their family. They wear their 24-karat gold. I believe that India has 6 times the amount of gold the women wear than there is in Fort Knox. So I don't see that going away. I see that China's GDP is all of a sudden rebounded, stronger than anywhere else in the world. Their stocks are also showing that. So I think we're going to see this continued demand, steady growing, supply contracting. There's a huge drop-off in exploration. The life cycle for discovering and bringing to production is getting longer each year with more environmental concerns. And now you have this ESG concern for public companies. And that's another expense that's not going to go into exploration. It's going to go into ESG compliance. So I think we got peak supply, and we could see gold 2,700 easily this next year. We could see $10,000. We don't have to have a world crisis like we've had before when the gold's had the big surges like one country. This is a global event. It's all coordinated with the G20. So I think that gold trades much higher.
And then we've heard from some speakers. So I've been interviewing a couple of mining executives, and last week, a couple of them said that young professionals or investors should be a bit bolder in their investment strategy and invest in like mining company stocks rather than, let's say, managed funds or ETFs. So what's your take on it? Like, do you think young investors can benefit from ETFs?
Well, sure, they can benefit from it if they can call it. What this phenomenon for me is I've had the first, only airlines ETF out in the U.S. called Jets, listed in New York. And it just sort of languished around 50, $60 million for the past 5 years. The market crashes, airline stocks crash, and $400 million came into that fund to be able to play that space. So it's interesting to see that there is lots of money looking for deep value. And I think a lot of these gold stocks are going to show up as all of a sudden offering deep value. On the previous cycles, there was lots of value destruction by gold mining companies just getting cheap capital, exploring with no results, no increase of production, just bad M&A deals. They've hurt the value metrics per share, and they're gone. We now have Barrick and Newmont. Generals are buying those stocks because they have a high free cash flow yield. And this high free cash flow yield of the S&P 500 going before this crash was about 4%. The world was, for all gold stocks, was zero. And those gold stocks that had high free cash flow were up 70% over the past year. So now we've had the market crash, revenue crash, cash flow, but the gold stocks, they're still producing. Most of the majority of them are producing, and they are going to have high free cash flow like the Barracks and like the Newmonts and Grand Columbia that's in Colombia. Companies like that are going to do very, very well. Yamana is another one. So I think that the generalists are going to go into the gold sector. They're going to look at from small cap to big cap producers, and they're going to look at those that have growth in revenue per share, have a high free cash flow, and they're going to bid those up.
And then I know you touched a bit on it during our introduction, but can you tell us about like the new technologies that can help miners and like junior explorer make more discoveries?
Well, I think companies like GoldSpot have incredible intellectual capital in Montreal and in Vancouver. We have a couple of key employees. They're all geoscientists with PhDs, the majority of them. And in Montreal is really the epicenter for artificial intelligence. So I really believe in that technology. And I know from creating JETS ETF or my GoAU smart sort of quant approach to picking gold stocks, you just do better. And what they really do better at is stopping wasteful exploration dollars. They de-risk exploration. And companies like Hochschild in Peru, listed in London, great success on the board, big equity stake. And you've had Yamana make a press releases that they've had some major discoveries, and they attribute it to GoldSpot's geoscientists using AI. Goldcorp, before it was bought by Newmont, they were using IBM's Watson, but they didn't have geoscientists to help navigate through and interpret the data the way GoldSpot has in Montreal. So I think that more of the companies use this, it will help the juniors to raise exploration dollars because it de-risks, it stops wasted exploration. And I think it'll help also get more discoveries, which the world needs, because if you look at the basic supply demand factors, we have peak supply. And we had it in oil 15 years ago when oil was $120 a barrel. And then the frackers came along with a new technology, and that changed, game changer. There's nothing that's come out for mining, especially when it comes looking for exploration.
And what type of company do you think will do better in this like post-COVID world, like whether it's like miners, explorer, royalty companies?
Well, what happens is the least volatility of the royalty companies. They just have less volatility, and they have a much higher free cash flow yield. And so they're going to attract, in which they have, especially Franco-Nevada with Pierre Lassonde is built. I mean, it's a phenomenal company with $21 million of revenue per employee. And they have the royalties on Barrick and Newmont's assets in Nevada, who have $600,000 of revenue per employee. It's so efficient, that company, and they pay out a rising dividend. So I think they're going to be attractive. I think when we go to the big caps and mid caps, you have to look for where the value metrics per share, not if they do a merger, not the gross number, but on a per share basis. So I think Detour could be able to come out and show growth metrics per share, and they'll get that re-rating. They get knocked down after they're bought by Kirkland Lake. So Kirkland Lake is the survivor, and Kirkland Lake gets knocked down, I meant. And I think that'll go for that re-rating, because management's very conscientious of ounces per share, revenue per share, cash flow per share. And I think a lot of the other companies that don't get that, they won't get money. It won't come to them. And the explorers have to be using something what GoldSpot offers, I think, to be able to speculate, for anyone to speculate for exploration. And I think that that's going to be a game changer. The old days of sending someone in the bush, staking a bunch of land and speculating drill holes, that's gone.
And do you think like the mining industry or mining companies will operate differently in a post-COVID world?
Absolutely. I'm going to cough. Go a second. One thing about being in Texas is allergies. Maybe warmer, but I got allergies. So let's talk about, you can slice this. So how will things operate after this?
Yeah.
I think a lot of companies are going to build supplies. Risk managers are going to become more important in what happens if you have a shutdown. Maybe it's power, maybe it's a blizzard, but they have to have supplies. So Gran Colombia had about 6 months of supplies. They didn't have to worry about the supply chain. Some of the other companies in other jurisdictions, their operations were safe, no corona problems, but getting the products you need to run, water, fuel, etc., to those mine sites, that's where the supply breakdown took place. So I think a lot of companies are going to have much more in a backup to survive 6 months.
And then since 2017, you're currently the chairman of the board of HIVE Blockchain Technology, which is a cryptocurrency mining company. So with monetary and fiscal policy that we're seeing, quantitative easing, lowering interest rate, like, do you think cryptocurrencies could challenge the traditional monetary systems?
Well, there's no doubt, and that really, if you read articles by the Bank of International Settlements, which is basically the gatekeeper for over 60 central bankers with paper money, they're very threatened by it. They've done everything to attack and vilify the crypto world until JP Morgan came out with their stable coin. And that was the bottom a little over a year ago. And so that winter, they call the winter period for the crypto space, was about 14 months. And so I think that's really important to recognize that you had a lift off, and then you had Facebook come out with their Libra, then crypto went nuts again, then all the central banks got together to go after Libra. It's sold down again. So I think you're still going through this sort of gestation period, but digital money is no doubt, it's coming, and it's there, and it will grow. What will be the form? We have to remember in the internet boom that peaked in 1999. Then there was a massive correction, an 18-month crash, and then came the Googles, then came the Facebooks and the Airbnbs and everything else that came along with it. They came after the crash. So who's going to win? Facebook didn't come to much later, but look at Yahoo. It's no longer relevant like you would say Google is. Ask Jeeves was around in the late 90s. It's gone. So I think it's important to recognize digital money's here. In China today, they all use their phone, and it's all a PayPal type of system, WeChats. One of my analysts was recently in China 9 months ago, and he could not use a credit card or cash to go buy a razor blade. He forgot. And it was only about what he had on his phone. And so I think that it's in motion. We're seeing more companies come out with apps that allow you to convert currencies into Bitcoin into a currency, etc. So I'm a big believer, and I'm really thrilled because I couldn't launch an ETF. So I got behind and co-founded the launching of HIVE, and it brought in $1 billion of capital market money from the US into Canada. And many other companies came along to launch. And I'm so thrilled that we just did a deal during this coronavirus. We still did a deal, and I'm thrilled to be in Quebec. So we're in shoot. We have Bitcoin production there. We have 14,000 chips there. We did a big order to buy more chips to upgrade the system. We bought them from CryptoLogic. So we've got a management team there. It's so exciting to be able to produce these coins.
Interesting. That's pretty good. We're hearing a lot of good stuff about Montreal and Quebec, so I'm happy. Do you think that with the current crisis, there are currently interesting opportunities for the market for investors? And how do you think young investors or professional can take advantage of this situation?
Well, there's old rules called asset allocation and speculation. And I have a simple rule that whatever your age is, that's what should be in short-term bonds or short-term dividend-paying instruments. So if you're 30 years old, 30% of your savings investments should be in something that's very liquid and is always paying you. You should always have different streams of income coming in besides your salary. Having dividend income coming in, having like Grand Columbia has gold notes listed on the Toronto Stock Exchange that pay you 1% a month. Beautiful piece of paper. You can't get that in money funds. So you have to have that component. And then the 70% should be more in growth stocks. And therefore, you can take a greater risk on exploration, development companies, and knowing that story, or the crypto space story. But if you're my age now, you have to be more cautious. So you're going to have 65% of your money earning income, and the 35% is going to be more in the growth and speculation. That's always been my discipline, and that's what I suggest. So your age, you can put a lot more money into that program. And I would really look at those stocks that have some of these junior mining companies that have free cash flow. They're producers. They're going to grow. And with gold, they're going to give you much more leverage on the upside. In the first leg we're seeing now, it's the big cap stocks, the Barricks and Newmonts that explode on the upside because they're liquid names and the royalty companies along. Now you come along with a second tier, the mid caps, then they explode and they actually outperform. And then you get the juniors. So we're still early before the juniors take off.
So Frank, before we end this interview, is there any last piece of advice you would give to our listeners, including our millennial members?
Save and invest regularly. It doesn't matter how much it is. It is like brushing your teeth every day. You can't brush them once a year and hope they're going to be nice. You have to do them all the time. And some people say, well, I need a lot of money. It's just not true. You have to have some discipline and just get into coming into a paycheck, whatever it is, just keep piling it in and become curious about how capital markets function, how people, because it is people. There's always these great new opportunities. And I think when young people become interested in capital markets, like the hot stocks now are going to have to deal with antiviruses, masks. So Canadian companies are going to come out. They're going to be making masks only for Canadians. You're going to see the same thing in the US. With HP making their masks in China, that created so many problems. So now people are going to start thinking of having my own supply, like a gold producer having its own supply lasting 6 months. Countries are going to have. So there's going to be new opportunities in the capital markets. And once you start following them, all of a sudden, your curiosity, you can make money with it. You can make a lot of money with it, but it's still good for your brain.
That's so great, Frank. Thank you so much for taking the time to speak with us today. So what we've decided to do for each interview that I record, YMP is going to make a donation through our Mining Care initiative to give the funds to United Way Greater Toronto for those in need during the COVID-19 crisis. So for those viewers or listeners, I'll put a link on our website and then you can get more information on it. But until then, thank you so much, Frank, and stay safe in Texas.
Thank you, Bianca.
It was a pleasure.
How was that? Good?